Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. A warm welcome to you to another exciting, of course, and also insightful edition of the Forex Morning Mastery with Sheriff Daramola. And in fact, I'm so excited to be with you here this morning after a significantly profitable 24 hours as we took advantage of some of those momentums across the market. So we are going to be looking at how we went through yesterday's trading session, and for those positions we still have running, how we are going to be managing them. We shall be talking about them here today. um, for those who are joining us for the first time, you are highly welcome on board. I'm so glad to have you guys around, and you might be asking that what is it that we are doing here? Well, we as technical traders, we come here together on a daily basis as a community, of course, in anticipation of both the London and the New York session, where we of course come to review if we have any existing position, see how we want to be managing ourselves, and of course strategically position ourselves in such a way that we can capitalize on any potential opportunity during the trading sessions. And this of course happens on a daily basis, 8:05 a.m. UTC. And in fact, I encourage you to stay tuned in so you don't miss out on any of these insightful ideas we shall be discussing here today. And of course, I encourage you to be part of our subsequent editions too as well. As the more time you spend with us, the better you get to understand how this works and eventually be able to use the information you have gathered here to make your own independent trading decisions. So once again, I welcome you on board. Now, in preparation for today's trading session, I have conducted a comprehensive analysis on all of the financial assets on our watch list for this week. And in fact, we have been monitoring three major assets, which includes the GBPUSD, the USDJPY, and of course the XAUUSD, which is popularly known as the gold spot. And of course, throughout the course of the week, we've not been doing pretty bad at all, as we took advantage of some significant momentum across the week. So we are going to be diving right into the details in a moment. Now, as usual, the first thing we are going to be doing this morning is to check on the economic calendar. Of course, we know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that will make us be able to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. Now, this week we have quite a lot of events that we are looking forward to. In fact, major events just like the US interest rate decision that happened yesterday, the consumer price index from the United Kingdom, which of course came below expectation, and of course we saw how the market reacted to that yesterday. Now, today we are having another impactful event coming in from the United Kingdom, and that is their interest rate decision. And with the way things are going at this point in time, there is a high speculation that the interest rate will be increased by another 25 basis points. I think this is the 14th time the Bank of England will be increasing that interest rate. Okay, the 15th time, consecutive time, the Bank of England will be increasing the interest rate to curb the inflation in that economy. And in fact, this rate increase has been affecting the sectors like the home sector, the labor sector, and the likes. Due to the high interest rates, there has been a low turnout on credit facilities, and as a result of this affects processing, and on the long run causes layoffs in the market. So we're going to be looking forward to what the actual data is going to be. Are we going to have a surprise today? Are they going to maintain rate, or are they going to increase rate? So we will look forward to see what the outcome on that one is going to be like. Then we are also going to be having the monetary policy summary. We are having the MPC vote rate unchanged, MPC vote rate hike, and of course the asset purchase facility and the Bank of England minutes, all of which will be happening simultaneously. And this is going to be coming up in about 2 to 3 hours from now. And you know how we do it in this community. It's not that the economic, the figures is what we are going to be looking out for, but the reaction of the market participants, the anticipation to the event, and of course the reaction after the event is what we are trying to sniff on the market structure. So what we are going to be doing right now is to go back into the chart, sniff the current market structure to look out for patterns and structures that can help us position ourselves in such a way that we can capitalize on this potential move. Now, with that being said here, and with the information we have gathered so far, let's dive right into the chart and let's look at things from a technical standpoint. Now, I see your comment, L. Lavitt. Good morning to you, L. Lavitt. How are you doing today? And trust you had a wonderful and amazing day yesterday, and glad to have you around with us today. So, as usual, the first asset we are going to be taking on today, let's look at this quickly. So, the first one we are going to be looking at today is going to be the GBPUSD. Now, since the beginning of this week, this market has been a little bit choppy as we saw price range. Hold on a second, let me zoom right in so that we can see things clearly. So we had this beautiful range here, which further emphasized the level of indecision in this market. As you will see, that price most of the time has been confined within the 1.240, which was our key level, and the 1.23750 for the major part of this week to further emphasize the level of indecision in this market. Though we had some couple of buy positions during the course of the week. Remember, we had a buy position here that was on Tuesday after taking advantage of the breakout of structure, but we can see here that price didn't move significantly well, and we were taking out at the worst case scenario break even. You know, we moved our stop loss as soon as price action moved in our favor. Now, during the live session yesterday, we talked about this current structure where we noticed this impulsive move to the downside. And one of the things we were planning yesterday is that we want to see how the market will react to this area around the 1.23845 level. Let me extend that one out a little bit so that we can see it clearly. So we had the 1.23845 area where we said we want to see how the market will react to the structure to decide if we are going to be joining the downtrend continuation or probably join the uptrend move. And to help us guide that decision, we had this descending trend line marked out where we said if price continues to stay below that trend line, we shall look out for selling opportunities, and the breakout retest of that structure will be welcoming buying opportunities. And of course, we took advantage of this opportunity. We saw the breakout. If you missed out on that one, market came back to retest structure and we saw price climb up. And in fact, we had about how many pips move right here? So from the first position, we had about 36 pips move, and the second position here, we had about 18 pips move, as you will see here, roughly over close to 50 pips before the sellers came in to take us out of that position. And I can remember I shared this update on my Telegram platform where I said we should all move our stop losses and secure this current buy position. And of course, we saw what happened. Price crashed, and if you had moved your stop loss, you must have been taken out with a modest size of profit or at a worst case scenario break even, depending on where you placed your stop losses. However, price nosedived to the downside, and personally I missed out on that one because I was majorly focusing on the US oil, XAUUSD and the likes, and I was looking forward to a retest to happen, which of course never did. But some of us took advantage of this move when price broke down this demand zone following the interest rate decision yesterday. And for those who took advantage of this opportunity, I'm very proud of you. Well done to you for capitalizing on that opportunities. And if you still have your sell position right now, you will be currently running with over close to 70 pips in profit at this point in time. So well done to you for being on standby to capitalize on that one. Personally, I told you I missed out on that opportunity, but I'm still looking forward to see if the market will be giving us some opportunities to join the downtrend move, if that is going to be the case today. Now, for those who still have a sell position at this point in time, you do want to be securing your position by moving your stop losses accordingly. And from the look of this current structure, I will be suggesting that anywhere above the 1.23320 area seems most promising to put your stop loss. And remember that while we adjust our stop losses, we want to ensure that we give enough room for price action to breathe. Now, with a well secured position at this juncture in the market, what is going to be our next line of action? Well, I would like to refresh our memories as regards to what is really going on in this market from an holistic standpoint, so that we can have a bird eye view of what is really going on in this market. And if you remember vividly at the beginning of the week, when we were looking at the higher time frame, we saw this beautiful descending trend channel, which has been supporting this bearish momentum in the last couple of months. So after connecting the series of lower highs and lower lows, we had this descending trend channel to work with. And at the beginning of the week, we saw our price action was trading. In fact, the first, second, and third day of the week, price was trading just right above that support line of that descending channel, giving us signs that we might likely be seeing a bullish momentum from that area. And in fact, that was where my projection was. I was looking forward to price respecting that support line one more time, like it has been doing in the last couple of weeks, to incite an uptrend move. But unfortunately, that momentum failed. And as you will see what happened right now, price action has finally broken down the support line of that descending channel. And for us, this is a sign that sellers might likely be pushing price further to the downside. However, since we are looking forward to the Bank of England's interest rate decision today, there is a likelihood that the anticipation of this event could cause some imbalance in this market to favor the buyers, maybe. So we want to be on standby to capitalize on any of the potential opportunity that come in. So we are going to be taking into consideration the potentials of both the buyers and sellers at this point in time. Now, since we already have a breakdown of the support line of that descending channel, let's first of all look at the potentials of sellers from an holistic standpoint. Now, if you look at the structure, let me zoom right in. Since we already have a breakdown of the support line of that descending channel, we expect that from a technical standpoint, that when price breaks down the support line or a structure like this, we expect some retest of structure to continue with continued selling pressure around that area to incite a downtrend move. That is one scenario that we are going to be looking at here to join the downtrend continuation. However, if instead price does this and break back above the support line of that descending channel, then we will consider this breakdown to be a false breakdown, where the appearance of buy pressure again above that support line is likely going to be inciting an uptrend move. Now, for us to take advantage of an opportunity here, we will scale back down into the 1 hour time frame to see what has been going on within this area in the last 12 to 14 hours to give us an insight into what our next line of action will be. Now, scaling down into the 1 hour time frame, we have an interesting setup gradually unfolding on our chart. So I will just zoom right into that structure. So remember that price had already broken down the support line of that descending channel. And since the breakdown of that support line, we can see here that price had been trapped within the 1.23320 and the 1.2310 area since the early hours of today. I think in the last 6, 7, 8 hours now, price has been trapped within that range. And you know how we do it in this community. Whenever price action falls into this kind of range, we want to exercise patience, as it reveals here that there is an indecision going on in the market. So we want to be waiting for a signal to come, which of course will come either in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell, which of course will be a downtrend continuation pattern. Now, if we consider the continued selling pressure since the beginning of the week, and of course taking into consideration the impulsive move that brought us to this point, there's a high chance that this consolidation phase we are witnessing here has a likelihood of transitioning into a downtrend continuation pattern in the form of a bearish rectangle, where the breakout retest of the 1.23100 area will be inciting a downtrend continuation. So we do want to be positioning ourselves for below the 1.23100 area to capitalize on a downtrend continuation. Now remember, for those who have been with us in this community, you know how we take advantage of these positions. If you have been profitable so far this week, that is, if you have been part of this profitable journey, joining the momentum all the way into this area, then you can afford to leverage on some of the profit you had made so far this week to test waters around that area and see if this bearish momentum will continue. And if it doesn't, then we know that, okay, fine, we're just eating into the profit we had made so far, so our portfolio is not really affected at all. However, if you are new with us here today and this is going to be your first position on the GBPUSD, that is, you are coming in from a clean slate, then I will be advising you to wait for confirmations before jumping into those positions. So what you are going to be looking out for here is price breaking down the 1.23100 area, scale down to your lower time frame like the 5, 10, 15 minutes time frame to look out for confirmations which would reflect on the chart as a retest of structure, continued selling pressure. Then you can join that decline to the downside. So basically for today, our center of focus is between the 1.23320 area and the 1.23100 level. Now, if it so happens that the breakdown of the 1.23100 level does not happen, and instead price does the contrary and continues to find higher highs and higher lows within this range, then we want to be getting ready for a reversal move. And if that is going to be the case, like I said earlier on the higher time frame, that this might likely turn out to be a false breakdown of the support line of that descending channel. And if that is going to be the case, then a breakout retest of the 1.23320. Please note that you will need confirmations to happen before we join this bullish move to the upside, considering the strength of the sellers at this point in time. But I doubt if this will happen today, but if it does happen, we want to be on standby to capitalize on that move. And for those who have been profitable so far this week, you would have had a sell stop triggered below the 1.231 to capitalize on that downtrend continuation. So let's see how far this is going to go, and please ensure that you have your stop losses in place, stop loss around or above that resistance line area, and if you are buying, the stop loss should be around or below the 1.23100 area. So this is my view here on the GBPUSD for today. So our center of focus for today is basically between the 1.2320 level and the 1.23100 area. So we want to be marking out these levels and using them as a reference point to guide our independent trading decisions for today. So I don't know if you have any questions whatsoever as regards to my illustration, or you need me to do any clarifications. Feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the next financial asset on our watch list. All right. So I hope we've marked out these levels on our chart. Very, very important. Remember, we need them as a reference point to guide our independent trading decisions. I see your comments, Stephen Eyinaya. Good morning to you, Stephen. How are you doing today? Glad to have you around. Hellavit, I see your compliments. Thank you very much. And all right. So, in the absence of no questions, I want to assume that we are all on the same page here. So, we shall be moving right into the next financial assets on our watch list for today. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And for those of us who were part of the XAUUSD live window yesterday, we had a phenomenal day where we took advantage of a buy position, and we had about four good buy positions before the sellers came in to take over this market following the Fed's interest rate decision that came up much more later yesterday. And in fact, I want to congratulate everyone who has been part of this profitable journey. Well done to you for being on standby to capitalize on that move. Now, before we go into the details for today, I would like us to run through the how the market has been playing out since the beginning of the week and what led to the decisions we made and how we intend to take advantage of any opportunities for today. Now, at the beginning of the week, it was confirmed that price was within a range, though the new week started with a bullish momentum. Remember, price started at around the 1.2250 area. That was at the beginning of the week, and we saw a very strong impulsive move to the upside, leading to a situation here where we had price caught within a range between the $1,930.50 level and the $1,922.50 area to give us an insight into the level of indecision at that point in time. And if you remember vividly, especially for those who are part of our XAUUSD live window on Monday, we acknowledged that sellers were finding it difficult to break through this area after noticing a couple of buy pressure candles around that level. And to capitalize on that uptrend, we said we were going to be using this ascending trend line that we spotted at the beginning of the week. And one thing we said here on Monday is that we are going to be taking advantage of a bullish momentum as soon as price breaks out, retest the $1,927.50 area. And in fact, that was exactly what happened. We had first position here, we had the second position around this level, and we also added the dot positions. Oh, sorry. So we also had a third position around the 1,934 level. So at the beginning of this week, we had three positions running, and that gave us roughly about 200 pips. I think we had the first position run to about 90 pips, second position run to about 60, 70 pips, and the third position ran with about 30 pips before that bearish momentum came in. And of course, you know, we moved our stop loss, so we were able to close in about 100 pips on that single move that day. So it was quite a promising start to the week for us. Then during our live session yesterday, hold on a second. So during our live session yesterday, we acknowledge here that price has already broken down the ascending trend line. And then we had a new trend line that we said we were going to be using to guide our decisions yesterday. And this trend line here and the $1,930.50 area, let me highlight that this was what we were going to be using yesterday to guide our trading decisions. And the reason why we anticipated buying opportunities above that level was the fact that we saw here that sellers were finding it difficult to drop further to the downside, as we saw buy pressure resume at both instances. And of course, we agreed here yesterday that the only condition that will make us want to continue selling is for price to drop below the $1,927.50 level, which of course never happened. And with the breakout retest of the descending trend line and the 1930, we had a new buy position triggered yesterday, and in fact we had multiple levels as we identified levels such as the 1934, we had 1937, and of course we also added one more at the breakout of the 1944 area, giving us over 400 pips in profit as we rode that move all the way to the upside. And in fact, I remember I dropped an update for those who are with me on my Telegram and TradingView platform as soon as price moved about 15 pips above the 1944. I told us all to secure all buy positions as we might likely be seeing a crash during the Fed's interest rate decisions. And of course, this was exactly what happened. So personally, I didn't take advantage of that bearish momentum. First of all, I was very tired at that point in time yesterday, and since I was already profitable, there was no point for me to join that move. But some of us did take advantage of this bearish momentum yesterday, and well done to you for being on standby to capitalize on that one. So definitely you will be way beyond us all if you have joined that bearish momentum to the downside. But once again, congratulations to everyone who has been part of this profitable journey. Now with this with the New York and London session getting ready to come in, what is going to be our plans for today? Now, I said something about the structure here yesterday that we want to wait for the market to normalize, that participants will want to be digesting the information from yesterday. The Fed also had a speech. It made mention of some couple of insightful comments that we will be affecting the economy, and one of them I could hold on to is the potential of more interest rate later in the rate hike later in the year. So before we go into the details here, I want us to run through my commentary on the XAUUSD this morning as regards to how we intend to manage our trade on the XAUUSD. Now, for those who are with me on the TradingView and Telegram platform, you definitely have gotten an update in that regard. But for those who are not, let's run through it together. So this is how we have been managing our positions on the XAUUSD since the beginning of this week. Now, about an hour ago, I shared this update here. So I said here that following a remarkable Wednesday where we capitalized on a 400 pip trading opportunity, the market experienced a subsequent correction aligning with our projections. As we allowed participants to digest the implication of the unchanged interest rate, price action retraced to the $1,927.50 stroke the 1,925 zone. Remember, the 1,925 zone is our key level for this week. Notably, buying pressure emerged immediately after retesting our week's key level at the 1,925 and the recently broken descending trend line. The question that arises now is whether this marks the inception of a new bullish wave or a continuation of a sell-off in favor of the US dollar. Now let's go back into the live chart and look at this critically well. Now let me zoom right in so that we can see things very clearly here. Now if you look at the structure closely, remember what we said here yesterday. The first and first I would like to clarify here is our key levels, which is sitting around the 1,925 area. Now you know how we use our key levels in this community. When price remains above the key level, we want to continue to look out for patterns and structures that support the idea of buying an asset. And when price breaks down the key level, then we want to be looking out for patterns and structures that support the idea of selling. Now, with the way things are going right now, price still remains above that key level, hence giving us the idea that buyers may likely still push price to the upside. And at the same time, if price breaks down this level, we could be looking out for selling opportunities. So we are at a crucial juncture in the market right now. And what makes this juncture more intriguing is the fact that it also lines up with that descending trend line we identified yesterday. Now let's look at the trend line closely and see how that is affecting the structure we have right here. Now, during our live session yesterday, we acknowledged that price had been finding lower highs since Tuesday, and as a result of that, we had this descending trend line marked out. And of course, the breakout of that trend line here was the beautiful opportunity we had to buy the XAUUSD yesterday. Now, from a technical standpoint, whenever we have a breakout of a key structure such as what we have here, we expect at some point in time there will be some retracement, which could be a reflection of profit-taking activities back into that structure to retest it, where the appearance of buy pressure around this area could incite an uptrend continuation. Now, you can see how this area is at a crucial juncture in the market where we need utmost attention and patience to capitalize on any potential move here. Now, let's zoom right into where our center of focus is for today. So I will just zoom right in. So our center of focus for today is basically between the $1,930.50 level and the 1,925 area, which happens to be our key zone for this week. Now, in the last 8-9 hours now, price has been trapped within this range, and in fact, we have a potential of sellers coming in, while also we have the potentials of buyers too. Now, what we are going to be doing here is to see how we can use structures and patterns to help us position ourselves for any of this move. Now, let's talk about the potential that price can retest this zone to incite an uptrend scenario. Now, if we take into consideration the impulsive bearish leg that brought us to this point, and as soon as price tested our key level, we saw a sharp rejection, we saw buy pressure, which falls around that descending trend line we identified earlier. Now, we saw price come into the 1,930.50, then price again come back down into this area. Now, the question here is, will price break down this previous low? If it does break down that previous low, then we are within the seller's territory. But if this candle turns out to incite some momentum back into this area, then we will be having a reversal pattern on our table in the form of a double bottom structure. And if we have a reversal pattern like this, then we know we want to have our neckline situated, which is between the $1,930.50 and the 1,930 area, where we will need a breakout retest of that structure to incite an uptrend continuation. So let's keep this one in mind. We are not saying this is what is going to happen, but if it does happen, we want to be on standby to capitalize on that move. However, if price drops below the 1,925 and in fact closes below that structure, then we will be getting ready to sell. Now, this candle has broken down the 1,925, and this candle is still about 53 minutes old, so it still has about a lifetime of 7 minutes to close. So this does not necessarily mean it has broken down the structure, because by the time this candle closes, it might turn out to be an hammer candle. So we need to be very, very patient, at least for the next 7 minutes, to see how market participants will be reacting to that our key level at the 1,925 zone. Now, if it turns out to be a hammer candle where price closes above that area, then the chances that this is going to turn out to be a reversal pattern increases. So we will be looking out for buying opportunities above the 1,930, but if instead price close below the 1,925, let's zoom in, then we want to be scaling down into the lower time frame to look out for confirmations that sellers will be dictating the pace going forward. And what we want to be seeing is signs that buyers are finding it difficult to settle above the 1,925. And this, of course, would reflect on the chart as price retesting structure, continued sudden pressure around this area. Then we want to be part of a bearish move where a further breakdown of the $1,922.50 level will be welcoming more selling opportunities. So this is how we are going to be capitalizing on any potential move today. So you can see how that key level situated at the 1,925 area is going to play a major role in determining what our next line of action will be. So let's see how this candle will close, and that will determine if we are going to be buying or selling from the structure. But if there's anything new that comes up, of course, I will definitely give you an update on both my TradingView and Telegram platform. So these are my views here on the XAUUSD. So let's see how the market will play out in the next 4, 5, 6 minutes. Then we will be making an informed trading decision on this one. If you have any questions whatsoever as regards to my explanations, or you need me to do further clarifications, feel free to let me know in the comment section, as I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, so I see a couple of comments here. One is from Steven. Steven, how are you? Steven is asking that how can I be part of your Telegram channel? Of course, it's quite easy and it's free. The ID to my Telegram channel is scrolling right at the bottom of your screen right now, so you can just check it out and type it into your Telegram, and voila, it will bring you my channel. So you can just join the channel right there. It's simple. Okay. El Lavitz is asking, how much does one need to have before one can start trading XAU USD? That's an interesting question. Well, what I normally say in such instances is that it's not even about XAU USD. It's not even about a particular asset. It's about what you can afford to lose. That's the right question to that question you are asking. That's the right way to rephrase that statement. It's what you can afford to lose. If you are having an account, you are having a portfolio or an investment portfolio, whatever you put in there is what you can afford to lose, because it might not go your way and it can go your way. And if it doesn't go your way, are you willing to let go? That's the question you want to be asking. So what is it that you can afford to lose? Is it $100? Is it $200? Is it $1,000? Is it $2,000 you can afford to lose? The question is now in your own court now. What can you afford to lose? What is it that if you lose it, it doesn't affect you, it doesn't affect your psychology, it doesn't affect your mental capacity? So that is how I will answer that question. All right? And let me know if you need further answers on that one. So that is that on that one. So let's see how the market plays out here. And in the absence of no other questions, I want to assume that we are all on the same page. So we shall be moving right into the next financial asset on our watch list. So the next asset on our watch list for today, and of course the last one on our watch list for this week, is the USDJPY. And I told you how much this area how sensitive this area is since the beginning of the week. And in fact, in the last couple of months, since price action climbed above the 145 area, we've seen the emotion of fear dominate this market. And remember, the reason why that is simply because of the expectation that the Bank of Japan might likely intervene. You remember last year, the same period and the same zone here, this was where the Bank of Japan intervened last year. And because of the memory of this intervention, majority are skeptical about holding on to their buy position. And at every point in time a buy move happens, we see it nosedive back to the downside again. And this is a reflection that majority are still not comfortable or have acclimatized to the zone. And as a result of this, these choppy situations, consolidation phases are very, very normal around this area. However, since the beginning of this week, from a technical standpoint, we had levels and structures which we identified and said we will be using them to guide our decisions. One of it is the fact that price had been caught within a range that was between the 147.890 and the 147.600. Then secondly, we observed how that area within the 147.720 and the 147.600 area had been a strong buying niche in the market. We saw here that every time sellers comes into the structure, anytime price comes into this area, we saw how sellers struggle to maintain that momentum. And as a result of this, you can see how buyers have always taken over the market as soon as price comes into the zone. Look at what has been going on here. Buy pressure since the beginning of the week, buy pressure. Even after the breakdown of that ascending trend line yesterday, we saw buy pressure resume around that area, making this level a critical juncture in the market where participants in the market feel comfortable buying the US dollar against the Japanese yen. Now, another thing that also buttressed an uptrend situation here yesterday was this pattern we identified on the higher time frame. Now, I would like to take us back to the 4 hours time frame to refresh our memories on what we saw here at the beginning of the week. Now, we saw this marked out at the beginning of the week. We saw this uptrend continuation pattern in the form of an ascending triangle. And of course, when we have an ascending triangle on our chart, it's a sign that price may likely continue to the upside. Hence, we want to be waiting for the breakout retest of that resistant line to incite an uptrend continuation, and it appears price has broken out of that structure, as you will see at this point in time. So I wanted us to see what it is looking like on the higher time frame and what led to the decisions we made on the lower time frame. Now remember that this resistant line of that ascending triangle happens to be our key level for this week, and it is duly located around the 147.950 level. Now let's scale back down into the 1 hour time frame, as that area there is going to be our center of focus for today. Now currently we have a buy position running after price climb back above the 147.950, as you will see here. And if you still have a buy position running at this point in time, you will be having at least 2 positions. The first one running with about 26 pips and the second one running with roughly about 5 pips in profit at this point in time. And for those who still have a buy position, I will be suggesting that all stop losses should be anywhere below the 148.100 area. Of course, remember that you do want to be given enough room for price action to breathe. Now, with a well-secured position at this point in time, what is going to be our next line of action? Well, first of all, we want to acknowledge that price action has been bullish since the beginning of this month, and in fact, we have an ascending trend line to buttress this bullish momentum, as you will see here. And of course, you know how we use our ascending trend line in this community. As long as price remains above the ascending trend line, we shall feel comfortable in our buy positions, while we also look out for more opportunities to buy. Now, since price still remains above that ascending trend line, let's position ourselves for more buying opportunities. Now, for me to capitalize on a bullish momentum here, you will see that since price tested and found a new high at the 148.400, we have noticed some selling pressure around that area. So buyers now have a barrier at the 148.400. Now, for us to join or add more buy positions to our existing trade, we would need price to break out, take out all the sell positions around that area to give us an opportunity to buy. Now, for me to buy here, I would want to see price break out the 148.400, a potential retest of that structure to incite an uptrend continuation. But I doubt if that will be happening today. And why is that? Well, the reason why I have said this is simply because before a significant momentum will happen here, the interest rate decision from the Japan's economy is likely going to happen first. Now remember, tomorrow is the Bank of Japan's interest rate decisions, and everyone is looking forward to that. And of course, you can see in the market right now that the market has been a little bit choppy. As we can see, price has been trapped within a range right now between the 148.400 and the 148.160 to emphasize the level of indecision here. And this could be connected to the expectations of the Bank of Japan's interest rate decision coming up tomorrow. Now, I'm of the opinion that if price will be breaking out of the 148.400, it will be after the interest rate decision. But if it doesn't, and if we have a breakout retest, of course, we don't want to miss out on that opportunity. It's just a thought process I wanted to share with you. Now, in as much as we're looking out for buying opportunity at this point in time, we cannot ignore the potentials of sellers. As you will see, we have been noticing selling pressure around the 148.400 since the early hours of today. And if the selling pressure persists here, we might likely see a situation where price will be breaking down that ascending trend line for the first time this month. Remember, this ascending trend line has been guiding this bullish momentum since the beginning of September, and if it gets broken to the downside, we are likely going to be seeing a momentum shift. And interestingly, that ascending trend line also shares a beautiful confluence with the 148.160 area. So let's see if the market will break down that structure. If it does, then we wait for confirmations like a retest of structure before joining that decline to the downside. But one thing for sure here is that as long as price remains above that ascending trend line, we shall feel comfortable in our buy positions while we look out for more opportunity to buy at the breakout of the 148.400 area. But trust me, I'll always be with you in the comment section to give you updates if I find something new that happens on this chart. So these are my views here on the USDJPY. It's a simple setup we have on this chart right now. So let's remain patient and wait for significant signal to give us an opportunity to trade. So our center of focus for today on the USDJPY is right within the 148.400 and the 148.160. So we do want to be marking out these levels on our chart, as we shall be needing them as a reference point to guide our independent trading decisions. And don't forget to mark out that ascending trend line too as well. So these are my views here on the USDJPY for today. So let's see how the market plays out, and if anything comes up, I will give you updates on both my TradingView and Telegram platform. So let me know in the comment section if you have any questions whatsoever. So I will be taking the next 10 to 15 seconds to see if there are any questions before we draw the curtain for today. All right, everyone. So in the absence of no questions, I want to assume that we are all on the same page. And I just dropped the link to the XAUUSD live window right in the comment section. So you want to click it, click the notify me button so you can get notified as soon as we come online. The XAUUSD live window is a platform that we created here based on popular demand. And it's a window where we come together to monitor the XAUUSD price action live here on this YouTube channel. So you want to be part of that session, and let's see if we can replicate what we made yesterday today again, as we will continue to monitor price action on that asset. So I look forward to seeing you right there in the comment section. So it has been a wonderful day right here today, and in fact we've been doing pretty well since the beginning of the week, and congratulations to everyone who has been part of this profitable journey. And please don't forget to support this project. The cheapest way you can support this project is by clicking on that like button. If you have found this content helpful and useful in making your independent trading decision, kindly support this channel by clicking on the like button. Your likes are very valuable to me, and in fact it helps the YouTube algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you very much for doing so, and if you haven't already, I encourage you to follow me on this channel for more of this content, as if you follow me, you will get notified whenever I update new videos and commentaries. Thank you very much, guys, as you do so. And for those who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how this works, and eventually be able to use this information to make your own independent trading decisions. So once again, I welcome you, and I look forward to seeing you same time tomorrow, 8:05 a.m. UTC, 9:05 a.m. West African time, as we come back here again to review how well these assets have been doing so far and how we're getting ready to prepare for the last trading day of the week. Do have a wonderful day, everyone. Bye-bye.